Hey everyone, hope you're having a great day. Tim Knox back in the Revolved Realty studio. Today we are talking about the dreaded A word. The dreaded A word, what is it? Appraisal. Yes, appraisal. I got to tell you, there's very few things that can put fear into the hearts of buyers and sellers than the dreaded appraisal. Now, you know what I'm talking about. Whenever you go to buy or sell a house, if there is a lender involved, there's going to be an appraisal. And the way it works is this. The appraisal, let me give you the definition of an appraisal. And I'm going to read this off my notes because I want to make sure I get it right. An appraisal is an unbiased professional opinion of a home's value. Now, the key words there are unbiased professional opinion. Appraisals are almost always used in purchase and sale transactions and in refinances. In a purchase transaction, the appraisal is used to determine whether the home's contract price is appropriate given the home's condition, location, and features. Basically, there's an old saying in the business that you can't overpay for a house because you're going to get an appraisal. Now, I think that would be just wonderful news if appraisals always worked as they should. Now, if you're an appraiser, hold your hate mail because you know this as well as I do. An appraisal, even though it is a professional, unbiased opinion, is almost always got some bias, or maybe it's just influence, because what appraisers look at is the home sales in the past 6 to 12 months. They look at similar homes in the market. They look at the condition, the location. They look at trends, and they try, God love them, in their best effort to come up with an appraised value that hopefully is close to the asking price on the home. Now, we don't see appraisals not work very often. Usually appraisals do come up to asking price because there is a margin of error there, if you call it. You know, if you have a house that you have $175,000 contract price on it and the appraisal comes in at $170,000, they're probably going to give that to you. All right. But in our current market, the way homes are selling quite often with multiple offers above ask, the appraisal becomes a little more dubious in the deal. Not dubious in the fact that it's going to come in lower than it should normally, but chances are in this market with people asking prices that are greatly above appraisal in many conditions or situations, the appraisal can cause a little bit of heartache. Let's talk a little bit about that. And you got to understand how an appraisal works. Lenders use the appraisal to determine the value of the property, and that determines how much money they are willing to loan. Because the appraised value typically is where lenders will set the bar. And if you are doing a percentage of the appraised value, that's what they're going to lend. Let me put it in terms that you can probably understand a little better. Let's say you're a buyer and you are just wrote a contract to buy a $500,000 house, and your intention was to put 5% down, meaning you want to get a 95% loan. All right. So on a $500,000 house, 5%, your down payment would be $25,000, and you would expect the bank to loan you $475,000. That's the perfect world. What happens if the appraiser comes out, does his or her thing, and the appraised value is not $500,000, which is the ask, but $475,000? It's a $25,000 difference. Now, that means that the bank, the lender, is going to loan you 95% of the appraised value. So 95% of $475,000 is $451,000. What does that mean? Well, if you still want to buy the home and the seller will not come in price, you, the buyer, have to bring that cash to the table. All right. So rather than putting down 5% or $25,000, now you're going to have to put down roughly $23,000 more, almost $48,750 if you still want to buy the home. Let's talk about what happens when an appraisal comes back low from the buyer and seller standpoint. From the buyer standpoint, as we just said, you've got the option of either bringing the additional cash to the table, or you may request that the seller reduce the price to the appraised value. Does the seller have to sell you that home at appraised value? Absolutely not. Most contracts that we see on home purchases now, there's a little clause in there that says home must appraise for purchase price or greater, or the buyer will have the option to renegotiate the contract or get their earnest money back. So if I'm the seller and I've got a contract written for $500,000 thinking, hey, I'm doing really well, I'm going to get my money out of this house, but then the buyer comes back to me and says, hey, Mr. Seller, the home did not appraise. You're $25,000 over ask. Are you willing to lower the price by $25,000? If I'm the seller, that $25,000 is a hard pill to swallow. But here's the bottom line. If this appraiser appraised the home for $475,000, chances are subsequent appraisers will do the same. And once that appraisal is in the system, folks are going to know about it. Now, if I am the seller, I can request that another appraisal be done. I can have my own appraisal done, seeing if I can come up with better comps. And it happens a lot. You got to realize appraisers are only human. And I have seen deals where a home did not appraise, and then we ordered a second appraisal, and it came in even above asking. So again, it's all subjective. You know, an appraisal an appraiser is being paid to provide you with his professional opinion as to the value of a home. But it is subjective to the market, subjective to the comps, subjective to his own opinion. It's subjective to a lot of things. So as the seller, I can either say, okay, I am willing to lower the price of the home to $475,000 and sell it at appraised value, or I can say, I'm not going to lower the price. If you still want this home, you're going to have to bring cash to the table. Otherwise, I will sell it to someone else. Now, the danger there, if you are a seller, is you are now going to have to sell that home to someone that doesn't care about the appraisal and someone who has the money to bring to the table. All right, that's the bottom line. Then it's up to you, the buyer, whether or not you have the financial wherewithal to bring that cash. Because you got to remember, the lender is only interested in covering their own backsides. And they are only going to lend you whatever portion of that appraised value that is going to be that plus your down payment. If you're putting down 5%, they're going to loan 95% of appraised value. If you're putting down 15%, they're going to loan 85%, and so on and so on. And again, the appraiser or the appraisal is there to protect the lender's interest in the property. Because God forbid, lenders do not and will not loan more money than they have an appraisal. And the reason is if something happens and you go away and they have to repossess that house, they want to be able to sell that house for at least enough to cover their loan. All right. So you've got some choices there. If you're a buyer or a seller and a home that you are dealing with does not make appraisal, you have to decide, number one, if you're the seller, are you willing to lower the price? If you're the buyer, are you willing to bring cash to the table? And here's one more thing to remember. If you are doing an FHA loan, FHA mandates that the home must appraise for asking price or greater. So if you are doing an FHA loan, which a lot of folks do because the rules are a little more lax as far as down payment and that sort of thing, but let's say you have an FHA loan, the $500,000 house that you want to buy does not appraise for $475,000. If the seller will not lower the price to $475,000, FHA will not make that loan. Even though you're willing to bring cash to the table, they will not make the loan. So your options at that point is if you do still want to purchase the house, you can switch to a conventional loan. If you're a veteran, you can, of course, switch to a VA. VA will loan money on houses that go above appraisal. But if you are doing an FHA loan, you are not going to be able to purchase that price if the seller is not purchase that house unless the seller is willing to come down. At the end of the day, if you're doing an FHA loan, you may have to go find a house that will sell at appraised value or less. All right. I know that's a little confusing. The bottom line is this: in this market, we are seeing homes go above appraisal. And the one thing that we're seeing a lot of are sales contracts removing that appraisal contingency. For example, I had one recently. The house, we knew it might appraise in the 190s, but the market was so hot and the house was so unique, we priced it at the top of the market. And what happened was we ended up in a multiple offer situation. We ended up with a buyer who offered way more than ask, but they had cash to bring to the table, and they waived that appraisal contingency. They removed that little line out of the contract that said home must appraise for purchase price or greater. That contingency was off the table because everybody knew the home was going to be far more unique and they would need to bring money. Now, my question is this. Are home appraisals eventually going to have to adjust based on our market? Because home appraisals are usually, not usually, they're always based on historical figures, things that have sold in the last 12 months, comparable homes, that sort of thing. But in our market, where every home that comes on the market is typically multiple offers going above ask, the thing that I wonder is, will appraisals have to take scarcity, the lack of inventory, and urgency into consideration? And if you're an appraiser or a lender, maybe you could answer that for me and the viewers in the comments below. All right, that's it, guys. Hey, before we get out of here, I want to remind you, we got a couple of great sponsors that work with us on the program. Stephen Allen at Caliber Home Loans. Stephen, he knows way more about this sort of thing than I do. If you have questions about mortgages, about appraisals, about new construction, renovations, anything, Stephen and his team at Caliber can help you out. They have the best loans, the best rates, and the best folks to help you get the job done. You can contact Stephen directly, and if you do, Stephen will waive that appraisal fee, which is about $500. That's the other thing about appraisals. They're not cheap. Our other sponsor here on the show is Jacob Title. Stan McDonald and his team at Jacob Title. They are our hometown closers. They will make sure that the entire closing process goes smoothly and everything is done correctly, and you have no worries when it comes to the title of your new home. If you contact Stan, let him know you heard about him on the program. He will knock $100 off your closing fees, okay? And of course, as always, if I can do anything for you when it comes to real estate, don't hesitate to call 256-679-0704. You can look me up on the web or email tim@revolved.com. And I would be happy to sit down and explain the entire appraisal process to you and help you find the home of your dreams or sell the home that you currently have. All right, that's it, guys. Get out of here. Make it a great day. Talk to you soon.